Welcome back to the studio for another edition of the Friday Five. The NFL started last night. The weather is crisp and cool, and fall seems like it's here, even though technically it's a couple weeks away. So let's jump in. Number one, mortgage rates, where we always start. National averages from Mortgage News Daily. VA 30-year fixed, 5.97%. FHA 30-year fixed, 5.95%. Conventional 30-year fixed, 6.29%. Conventional 15-year fixed, 5.6%. And then that conventional 7-year ARM, 5.59%. So definitely some improvement in mortgage rates again this week. We are at the lowest levels of 2025. So what's leading to the improvement in rates? It's really three primary things. Weakness in the jobs market, which is coming through in the BLS jobs report, ADP report. Those are two things that came out this week that impacted rates. Lower inflation numbers. And then number three, signs of a softer economy just in general. So if these things continue, we're going to continue to see mortgage rates improve. We also will see more rate cuts from the Fed as well. Most are expecting a 0.25% improvement in rates in September at the Fed meeting. And some people are actually forecasting 0.5%. So we'll see what happens, but good news from the mortgage rate front. Number two, there's a mortgage product called DSCR. I did cover it in a previous video. DSCR stands for Debt Service Coverage Ratio, and it's a mortgage product that's specifically for investment properties where the borrower qualifies not on their own income or debt to income ratios, but based on the income of the subject property comparative to the mortgage payment. Most times that ratio has to be at least 1, meaning the rental income exceeds the monthly mortgage payment, including taxes and insurance. So my buddy Joel is listing a property, and he said that he had an offer from an investor using a DSCR product, and that's what the pre-approval was for. So I said to him, you probably should reach out to the lender and ask them what number they're using for rental income from the subject property, because if that number is not reasonable comparative to what the market rents should be, that pre-approval may not be worth the paper it's printed on. So DSCR loans, real estate agents, if you have a pre-approval that's DSCR, make sure you check that piece because it's a really important data line. And if it's a garbage number, then you might not have a legitimate pre-approval in your hands for your listing. Number three, I had a client reach out this week, did a new pre-approval for him, and in reviewing his credit report, he had really good credit history, great payment history, except his credit score was 660. So why, if you have perfect credit history, perfect payment history, usually you're going to be in at least the low 700s, if not higher. So I looked at his credit report, and he had two collections on his credit report. One was for like $700 and some dollars. Another one was for like $80. So I connected with him and said, hey, these two things are really pulling down your credit score. I would strongly suggest that you reach out to the collection companies and see if you can negotiate, not the balance down, but see if you can negotiate what's called a pay for delete, where you pay potentially the full amount and they agree to then delete it from the credit report altogether like it never existed, which is different than them just marking it paid on the credit report. So I ran a simulator for him, and if he gets both collection companies to agree to accept payment and then as a pay for delete, his credit score is going to go from 660 to 763, 100 points just by getting those two collections deleted from his report. So he's going to reach out to both lenders and try to do a pay for delete, and hopefully that gets him in the mid 700s with his credit score, which is going to mean that he's going to get a much better interest rate when he goes to buy his new home. Number four, if you love the location of your current home and you really like your current home, but it's too small for you, then I have a suggestion. Maybe instead of selling your current house and incurring all the fees related to selling it and then buying a new house and incurring all the fees related to buying a new house, maybe you should look at a renovation loan option instead. I have a customer right now. They own a very nice ranch home in Upper Milford, glorious Upper Milford Township, on about an acre of land, and they're having their third baby, and it's just too small for them. So they approached me and said, we love where we live. We don't really want to move, but we feel like we're outgrowing our house. And ultimately, they've connected with an architect They've also connected with a builder, and they are going to pop the top off of that ranch home, put a second floor on it through a renovation loan, and hopefully be really, really happy with the end product of their new house while staying in the same location and having the financing to do so. So if you're interested in staying in your current house and renovating it, a renovation loan can be a great option for you. Number 5, the thought of the week. This comes from James Clear's 321 newsletter, which comes out every Thursday. If you want to sign up for that, you just go to his website. I'm sure you can Google it and find it in 10 seconds. So here's what he had in this week's newsletter. He said, one study looked at artists who started at the bottom and worked their way to successful careers. The researchers identified one factor that was consistent across the group. They performed far more shows than the average artist. The same principle holds true in many fields. If you want to rise, you need a lot of shots on goal. Keep showing up. Keep making new material. Eventually, you catch a lucky break. And shooting these videos weekly, I feel this in my bones. I don't always feel like my videos are great, which I'm sure if you're watching consistently, maybe you agree. But I feel like if I keep doing it, I'll continue to refine and get better. I feel more comfortable in front of the camera and in front of the microphone and in front of the fancy lights. And it's just all about continuing to show up, keep working hard, keep getting better at your craft. And that applies to every industry, whether it's mortgage or sports or even school, anything that you're doing. If you keep showing up and working hard at it, you're going to get better. So thanks for tuning in. If I can help you in any way, I truly mean that. Please reach out.